Hello traders, this is Mac Billion. Today is March 16, 2017, and let's talk about the market. Today I wanted to talk about Tesla and I wanted to show you a couple charts so we can compare what is happening and what happened with Tesla in the past. So we can compare and we can at least predict a little bit the probabilities that we have based on Fibonacci and price. You can see here at the beginning, this is a 5 years daily chart. In 2012, 2013, it didn't do anything. You can see right here, it was just flat until the middle of 2013, it started moving and he went and tested the major Fibonacci resistance. Now support at 185. That was in October 2013. Then in February 2014, we break out the level until September. We test the major, make the first major high at Fibonacci 284. So it was a major move with some corrections, with two corrections, and then after that we have been trading inside 284, 185 for 3 years. You see, every time it goes to 284, it fails and goes down and tests the 185. Right here in July, it did the same. It failed and it went down, break down the 185 and tested 155. The same here, and you also can see there is a middle, and then between 284 and 185 there are a couple Fibonacci retracements that are important, and that one of them is 260. You can see here the spikes on 260, but it never holds, and every time it fails it goes down very hard, almost vertical. You can see here, so you have to respect this 260 level, which is we are right now. We are right there. Pre-market today it went up to 264, but you see all the spikes right here. It went 271, 270. So you have to respect this area right here. So until it goes about 272, that's when it will make you believe this is really bullish. Right now, because all the fails in the past at these levels, it can fail really hard, as you can see here, really hard, if it doesn't complete and retake the 272 level. So let's see what happens tomorrow, if it's gonna trend about that level or it's just gonna make a spike right there intraday and then goes down. If you finish below the 20 double exponential, which is 253 right now, that will make and trigger my trade to add to this position. Right now I'm bearish. I have a bearish position, which is I have April puts, but I'm also open mind and I'm looking at my plan. My plan is if we break out the 272, there's no way that I'm gonna hold this position. I might choose to go long, looking for a retest to 284. DMI is bullish, but the directionals are very close in the middle, so they can switch back in a second. So now I want to show you another chart that I have, and this is the same daily chart, but this is with a volume profile. So I can show you that the spikes at 272 are resistant right here, and there is support at 245, and there is support at 185. So you can see the volume profiles confirms the Fibonacci retracements. Another chart that I wanted to show you is the Heikin-Achi chart, confirming that the move today and yesterday it was strong because there is no shadow and the candles is right there at the Fibonacci 260. So that makes you believe that the needle went from bearish to the middle, so it's neutral now because the Heikin-Achi is telling you that this move might be a strong move, so you have to be open mind and get out of the way of the bulls if they break out the 272 that I'm talking about. And the last chart is this 90 days 30 minutes chart or 1 hour chart, and you can see the same. The Fibonacci 260 is resistant. You see the spike that today did after hours to 64.70, but it went down and it's just waiting for the market to open for the morning to the futures to open and start trading. So we'll see. So one thing I'm looking is if it fails below the 21 DIMA, then I'm gonna think that this thing is the move is down, and I probably add to my position. But for now, I have to be very careful because again, Tesla is a monster stock. You can see all this move, all this volatility. A lot of people like Tesla because it's a lot of volatility, and I'm sure many of you have made a lot of money in those moves. But if you are in the wrong move and you are not honoring your stops, then you can have a stomach pain. You're gonna be in trouble. You're gonna feel really bad because this thing goes when it goes down, it goes down, but when it goes up, is like a trend. It goes up really fast, and especially the auctions price depreciates so much that you even if you think about not closing your position the next day, it's just over. The auctions, you buy an auction for $3, $5, and the next day it goes up so fast in the morning or during the day that those $3 auctions go to 50 cents. So you don't want to sell those 50 cents. You keep it, and at the end you lose all the money. The other thing that I wanted to tell you is in this game, the market makers are the ones that make the most money. The banks, the hedge fund, because they have teams of people working in these kind of stocks, and when they see a lot of volume, when they see a lot of people trading, they are the ones selling the options. We are the one in the middle that we kill each other, trying to tell people who is better, who is the one who is right. But some people, they just talk and talk based on nothing, based on biased information that the market makers put on. They have a team of people writing articles, saying that the stock is going to go up or going to go down, and you can see it. You can see in many websites how they post these articles that you usually share in the social media. But the only thing that I wanted to tell you is follow the chart. Follow the chart. Have a plan. Have a map. Use Fibonacci. Learn how to use Fibonacci. This is a major advantage when you know Fibonacci. It's very simple. It's not. It's not hard as people say that it's hard. No, it's very simple. So think about it. We are in the middle, and the guys, the market makers, are the one that we have to beat, and we have to get together and stop fighting in social media, because the ones that we have to fight are the market makers. And to do that, we have to learn technical analysis and stop reading and share the articles that they post, because they are the one paying for the articles. So that's all I wanted to say. This is everything for today. Trade on.